Folks, we're glad you could join us on this episode of Business Redefined, your weekly most comprehensive look at the world of business, finance, and economics. It finds us smack in the middle of the budget cycle for FY 2026-27, which starts effectively on July 1st this year. We have seen two very critical documents. The first one is the budget estimates for the next financial year, and the second one is the finance bill of 2026. Now, the budget estimates cover the appropriation side of the budget, which basically tells us what the spending outlay looks like, which stands at a staggering and historic 4.82 trillion shillings. And the finance bill tells us what the revenue-raising measures are being proposed by the state. And that document, the proposals contained as it is right now, target an estimated 120.8 billion shillings. That is based on the guidance given by the National Treasury. Tonight, we want to have a conversation with three distinguished panelists to help us make sense of these numbers. But before I get to them and introduce them, let's do some context setting. So let's start with the appropriation side of the budget. What really are we looking at here? If you take a look at the numbers that are shaping up, we have a 4.82 trillion shillings budget. And if you disaggregate that, we have the national government taking about 2.9 trillion shillings. We have consolidated fund services where service of debt comes from, and that's at about 2.6 trillion shillings. After that, we have the county's equitable share, which stems from the division of revenue bill, and that one stands at 420 billion shillings. So if you sum that, the aggregate budget size actually stands at 5.87 or 88 trillion shillings, but we always deduct the debt redemptions because of the rollover factor, and that is how we arrived at the aggregate 4.817 trillion shillings. And this, I should point out, is about a 3% increase from the budget we have for the current financial year as at Supplementary Budget 1. Let's go to the next slide where we take a look at how the revenue numbers look like. Now, this is important because you have to find a way of financing your anticipated expenditure. So the ordinary revenue stands at 2.98 or just about 99 trillion shillings. Appropriation in aid stands at about 644 billion shillings. And then we're anticipating about 44 billion shillings worth of grants coming in. And that takes the total revenue projected for the next financial year at 3.67 trillion shillings. But let's break this ordinary revenue number further because that is where it hits you and I. Let's go to the next graphic here. If you take a look at this, ordinary revenue disaggregated income tax, and this covers pay as you earn as well as corporate income tax, stands at 1.38 trillion shillings. Value added tax is the next biggest tax head, coming in at about 830 billion shillings. And then we have excise duty coming in at 382 billion shillings. And finally, investment revenue coming in at about 53 billion shillings. And this is where the dividends and all of the measures of revenue come in to the government. So we have looked at the expenditure side and the revenue side. That tells us we have a shortfall. How does it look like? Let's go to the next graphic. And this is how we shall context set here. Our fiscal deficit for the next financial year stands at 1.14 trillion shillings, quite considerable. And how do we intend to plug this deficit? We intend to go to the domestic market and borrow about 996 billion shillings, which is quite significant. And that tells you that we will be talking a lot about interest rates when it comes to looking at the next financial year, because when the government comes into the market this heavily, it will be quite significant. And external financing, we are targeting as a country about 149 billion shillings. There's a story to be fleshed out here. Our typical sources for external financing have almost dried up. We are still in talks with the IMF for a new program. And these are the numbers we want to help make sense of tonight with my panelists. Right, and I'm joined on set by Jill Shah, Vice Chair at Kenya Private Sector Alliance, focusing on the Public Finance Committee. Jill, welcome on set.
Thank you, Julians.
Kwame Owino, Chief Executive Officer at the Institute of Economic Affairs. Kwame, welcome on set.
Thank you very much.
I should point out we'll also be joined by Fred Kimotho, Associate Director at Deloitte East Africa, who will also be joining us to help us dissect the finance bill and the budget estimates. Kwame, let's start with you. We've run through the numbers. What do you think?
Well, I mean, as usual, you know where I'll come in. I'm very concerned about the debt escalation, and specifically because if you look at it a couple of weeks back, the government of Kenya was in Washington. I mean, the cabinet secretary for finance was in Washington, D.C., and in discussing whether the program would start with the IMF, one of the things that was signaled, my own reading of the conversation from the IMF's Africa representative was that, look, Kenya will only receive, or rather we could only start a program if we can agree on a credible fiscal consolidation plan. The numbers that you've put here tells us that what they were saying is that, look, to say that the government of Kenya has not done its homework in terms of fiscal consolidation, because it still looks like, well, borrowing is aggressive, 996 billion of borrowing, so that's basically domestically, which is close to 3 billion of borrowing every day. That's quite a lot, and that's just in the domestic market itself. So the displacement of private sector, which is supposed to energize growth, is something that's going to continue. So I think I come back by saying that whoever was speaking at the IMF, I think he did not need to make snide remarks, but what he's telling me is that the government of Kenya has not done its own homework. So definitely, as you suggested, an IMF program under these conditions is unlikely to happen.
And we have the IMF Managing Director in town who has been attending the Africa Forward Summit. We'll be touching base with the National Treasury to hear what they say about that. Jilna, what do you make of these numbers, especially the revenue side? You've seen the projection like on income tax, $1.4 trillion. What do you make of it?
I think we would say from income tax also we need to maybe further dissect it. You said that it's made up of PAYE, corporation tax. There's also withholding tax aspect to it. And if you look at it, I think withholding tax might not be performing as well as intended. PAYE, maybe we're doing well, and hence the reason we did not get to see the PAYE revisions
in the finance
that
bill.
we was expecting in the finance bill.
Yes.
But if you look at it from a withholding tax perspective, dividends have not been, companies have not been performing, dividends have not been given, hence you do not collect from a withholding tax aspect. And that's the reason we are getting this whole introduction of 60% in our finance bill.
Yes.
So you can see where we are headed in terms of why such measures are also being introduced in our finance bill and where the targets are. And you can see it's quite heavy on the withholding tax aspect as well. If you look at the numbers, we are quite ambitious, I think, from a collections perspective. And I think if you look at it, we need to look at it from a global perspective. Overall, we are seeing a global, slowdown, not just Kenya alone. And on top of it, all these other setbacks that we have from, supply chain disruptions perspective. So will the manufacturing sector be able to get their raw materials? They're not being able to get their raw materials on time. They're expensive to get. Insurance, even for freight, for cargo, has increased. So these are the extra costs that we are looking at. So are we going to be achieving these bottom lines that, you can charge your corporation tax on? Yeah. That's a question I think we also need to ask ourselves whether these are really the realistic numbers. And I think a lot of focus ends up going on the income side of things, and we never place any emphasis, even as private sector, on where the expenditure is going. So perhaps the conversation should be
on the expenditure side.
On the expenditure, how does it become 4.82 trillion from what it used to be 5-6 years ago? So I think that's the conversation we ought to have.
But Kwame, on that point, anytime I engage the National Treasury, the argument is, look, let's be very pragmatic here. If you have 2.5 trillion shillings, as we have shown, going towards consolidated fund services, by the PFM Act, you won't negotiate about those. You will settle them. You have a public sector wage bill standing at about 1.1 trillion shillings. Then you have the equitable share at 420 billion shillings. If you aggregate that, already you're blowing your revenue envelope. Treasury says, to be very fair, we don't have wiggle room.
Well, okay, so that might even be true. I disagree, but that might even be true. So even if you give them, cut them slack by saying, fine, they don't have wiggle room. But let me tell you one of the things that you expect people in Treasury to know. I say this with respect. Look, my colleagues and I in the IEA stopped using sophisticated models to try and forecast for revenues. And this is what we did. Somebody just discovered that if you take 3 years' worth of revenue in Kenya, right, add it up, average it, and add a small factor related to the growth rate, you will bang on come within 5% of what the revenues collected will be. So if you use that same numbers for what we have today, do you know what it's telling us? That we are actually aiming for 300 billion more than will be collected.
Yeah.
And that's something we can tell from today. So what are we talking about? Before you even talk about these global shocks. So it's true, it's a difficult one, but it means that a revenue-leaning fiscal consolidation plan alone will not work.
Yeah.
It will not work. So the Treasury has to advise Parliament about being serious with cutting revenues, cutting some expenditures as well. And it doesn't have to mean cutting expenditures. You could actually just cap expenditures and hope that over 1 year, 2 years, growth gets you that wiggle room. Because there's no other magic. So we understand the constraints, but the problem with this is when your debt position is where you are and you're borrowing 1 trillion per year, it means that you're cutting the scope for anybody in the future, because that money will already be claimed in future revenues to pay. So you're not buying yourself that chance. So I think they're failing or refusing to do the difficult homework of what do we really do to actually freeze the growth of the public budgets. And you can't blame it all on debt, because as you take today's debt to pay last year's debt, you're actually escalating that problem.
You're kicking the can down the road, as you like to put it.
Yeah.
Gilna, one of the significant elements around the budget for FY 26-27, it will be the last year of the medium-term revenue strategy. We had an implementation matrix, which I dare say we have really derailed significantly from. We're supposed to see amendments to the pay bands. We're supposed to see a change in the VAT rate and the VAT threshold. We haven't seen those. What do you make of where we are? What do you think should be the priorities in this last year, Gilna?
I think we should be following what the medium-term revenue strategy and the national tax policy was set out to do. And we have not done that. And as you say, and I think we are hiding behind the whole excuse of the tax base has not expanded, hence we are not able to do this, yes, and these global shocks and all that. But if you look at it, we have tried digitalization. Did it work? Did it not? The revenues are there for one to see. So I think, as you said, getting to the medium-term revenue strategy, we're not doing that. At least for sure in the next 1 year. Looking at the finance bill as is, and if this is the strategy we're looking at, from a 1 year plan, we are far from achieving or meeting the MTRS, and we are not giving them the predictable environment that one needs, because that was what was initially promised in our MTRS, that we will be giving a stable environment from a tax policy perspective of every 5 years. Looking at this finance bill, we are looking at changing, whatever was changed even in the Finance Act of 2025.
As recently as last year.
Exactly. So if you're moving to change something from last year, what comfort are we giving to even investors to this country? As private sector? That's one of the most worrying trends we have, because really speaking, our growth, if you look at it, is not really coming from private sector. It's actually public expenditure. The growth in public expenditure as an economy. So
Kwame, on that point of this being the last year of the MTRS, the cycle for 24-25 to 26-27, where do you assess us being, and also consider the fact that, and this is one thing which has really been raised by the government, we are effectively in an election cycle. If you look at IEBC in the budget estimates, it's the one line item whose budget has been doubled to about 26 billion shillings. Is there a case there, Kwame?
Well, I disagree with, and here I blame both Parliament and the Executive, for trying to blame the IEBC for 26 billion shillings is not small change, but for the government of Kenya, based on the last year's numbers, that's 4 days of revenue. So if you're going to collect 4 days of revenue to take on a constitutional obligation, which you do every 5 years, so it means it's equivalent to less than a day of revenue. It's 0.8 days of revenue per cycle. So if you got to the point where 4 days of revenue change in 1 year, once every 5 years, is the cause for the lack of credibility in fiscal policy, that's a joke, to be honest. It doesn't cut. I actually think that there's a lot to be done about whether the Kenya's elections should be as expensive as it is, but at the same time, we know in planning that we're going to have an election, and during an election year, it tends to bump. So that's one. we also know that elections have to come. It's part of the constitutional demand. So if the constitution demands that, we can't then claim that when we have that's part of why a planning department exists within the Treasury, so that you can take account of all the risks that are. So if the MTRS is coming to an end and you haven't done most of the stuff that you talked to, your own milestones are out. Right? And from the first year, by the way, it's not as if it happened because of a shock. Yes. From the first year as well. So what it tells me is the indiscipline within the National Treasury, which is reproduced in all their documents. If you look at the budget, we are not too sure, we are coming to the next financial year, but we're not too sure that we are done with the supplementary budgets. So the credibility of government, public sector numbers on the budgets is terrible. Yeah. No wonder it is also reflected in the other documents that they have. So in my view, this is a credibility problem. So you can't state that it's all one shock, because I mean, any revenue strategy also accounts for the fact that an economy can suffer shock. Yeah. And we know it within Kenya, for instance, when you have droughts or sometimes when elections are difficult, it's been less so. But so I hope not to come out as too harsh, but I mean, this is just a D grade. And people in the Treasury who are managing departments should just be embarrassed. Yeah. And I think Parliament should not allow them to get away with it. But Parliament is another animal altogether, right? I mean, they sometimes generate the new supplementary budgets because they also want some more money here and there. So yes, they failed to do their job. And in my view, that's institutional failure. I don't think shocks are required. I mean, I expected, so it's not required, but expected. Yeah. But if the MTRS, I mean, if you look at it and you're scoring it objectively, it's a really, really bad grade.
There was a mention of Finance Bill 2026, and that is what I want us to get into. And one of the areas where we really had much anticipation around Finance Bill 26 was on the adjustment of pay bands. Not only is it in the MTRS, it has been mentioned by none less than the President and the Cabinet Secretary for the National Treasury. We thought we would see it in the Income Tax Amendment Bill. We did not see it. We were told it was too close to the Finance Bill, so let's wait for the Finance Bill. The bill is here, and I have my copy as I always walk around with it. It is nowhere to be seen. Let's listen to why this has been skipped. We have that bite on Treasury CS John Mbadi on pay as you earn. Treasury CS Mbadi on pay. Jackson, do we have it? Play it, please.
On the other issue that has been flagged up is this issue of pay as you earn. We have not dropped that issue, pay as you earn. The changes that we had proposed and which I spoke widely about. What my team is doing is to do simulation. The first simulation was that we are going to lose income of about revenue of about 35 billion shillings per year. And we are looking at the economic situation as it is. And we are looking at the impact of personal income tax reforms that we have carried out at Kenya Revenue Authority. And before this public participation engagement ends, we are going to make a decision. As a matter of fact, we have agreed with the head of state that this is a matter that we are considering, as we had already communicated. So before 30th of June, before this bill is passed, the government is likely to propose amendments to align pay as you earn to the proposal that we had given the people of Kenya in terms of increasing the allowable income for tax purposes to 30,000 per month, up from 24,000. So it is not taken off the table. I could see some media is reporting that I've backtracked. I have not backtracked. We are considering that very seriously, and before we conclude the Finance Bill of 2026, chances are that we are going to have the new tax rates on pay as you earn.
That is Treasury CS John Mbadi. Yesterday, he summoned us pressmen to his office to explain why pay adjustment bands are missing from Finance Bill 26. Gilna, he says that when Treasury did its simulation, the indication was that if they bumped up the tax-free threshold from 24 to 30,000 shillings, there is a loss of 35 billion shillings in what would be realized revenue. Do you feel it's a compelling reason?
No, because I think if you look at just 6,000 at 10%,
yeah,
and looking at 3 million, even the math is probably not mathing for me. So that's not really, to me, a very good excuse, as I would say. And I think we also need to understand that, are we really giving the right wage? Even are we really taxing the PAY bands? If you look at other neighboring countries, are we aligned with the level of income that the others are earning? And because for us, somebody earning almost 30,000 is straight away being taxed at 30% straight away. Whereas it should be a gradual, rate that you should be.
Progressive enough.
Yeah, it's not progressive enough in my view. So, and that's what we were even proposing as KEPSA, that if you can check the rates, give us, we had provided a whole matrix as well on what level they should be taxing at, up to 30%. And we were moving to, yes, 500,000 and above can be taxed at the highest rate that you want it to be, that's fine. But if you can just cushion these people, even up to, if not 30 to 50,000, the level of disposable income, and the statistics was actually done by the Kenya Bankers Association in terms of how much revenue growth that can also in turn lead to. Because these people will now have spending power that will give that economy the boost, the spur, that we need. Because they will have now, if you look at a current basket in a supermarket, it's empty, as opposed to what, a small income, extra income in someone's pocket can lead to. And we can spur the manufacturing sector within the economy. Everything automatically gets a boost. And we were looking at almost a GDP increase as well to that. That's the level of work that had been done by the KBA. And yet we did not see that in the finance bill. So that clearly shows that the simulation took a bit of time since the time it was first announced. What have we been doing all these months?
But Kwame, isn't there a point, because Treasury is arguing, look, just last month we had to rejig VAT. VAT is the second largest tax head. We have slashed it for petroleum products from 16% to 8%. Surely we need to also ensure we safeguard the revenue envelope.
Okay, so the first thing is this. Look, if you're going to change tax rates, if you're going to change tax rates for tax bands rather for pay as you earn, why do we want to sneak in at the last minute? Why isn't it in the finance? I mean, it's the finance bill to start with. It should have been
as a proposal.
As a proposal, precisely. And then we can debate its merits. But to say that it's still being considered and some simulations are showing out there, I mean, just suggest to us that you're trying to get Parliament to start to run away with the bill and then obviously come back later. So that's the first thing. The second thing for me is that CS Madi is trying to convince me that when the Treasury puts together the finance bill, they haven't considered what the total bill means. Because you're rejigging and changing many, many taxes. So the consolidated bill, what effect will it have? And you're trying to tell me that the change, as she's mentioned, because the relief in my calculation is 6,000 shillings, because it's moving from 24 to 30. It's just 600 per person per month. Over a year is 7,200, right? By 3 million people or so, the math doesn't add up. But regardless, let's keep it here. Maybe know something we don't. But the third one is, it's also incomplete argument to say that you lose that money, because some of that money that will come out by being saved are very low income, comparatively lower income people. And that's the kind of person whose wages have not grown over the last 5 years, with the exception of the last. So obviously, if they have savings, they're going to actually spend it. They're going to spend it. So
then you get your indirect taxes.
Precisely. Yes. And so you're going to get it. So that straight line argument that you're going to lose 35 billion is just not credible. And I think that's the thing. But my view is the people on whose back we should put some fire is Parliament, and tell them, push this thing yourselves if they really mean it well. Because none of the parliamentarians have ever said, if you bring that bill, we're not going to pass it. So maybe it's time for us to actually ask them to do that. But on the whole, the complexity of Kenya's tax system, and I think Treasury hides behind that complexity by telling us, no, if we change this, the world will stop. It's unlikely. But then finally, when you talk about petroleum, and I understand that petroleum is very useful for transportation. Transportation is essential in goods production, and it drives inflation costs as well. But when you actually subsidize petroleum through the Petroleum Levy Fund, Development Levy, and at the same time you're reducing you're reducing VAT for petroleum back by half, the people who appropriate, who benefit from actually that shock, that reduction in petroleum prices, are actually richer people. Because they're the guys who drive. They're the people who drive. So he's telling us that they're comfortable 1 month ago coming up and in the night changing laws to benefit drivers. But when it comes to people earning 24,000 shillings, raising this to them to 60,000, we are suddenly going to lose a lot of money. Guys, please tell us a straight story.
Fred Kimotho, welcome on set. Fred Kimotho is Associate Director at Deloitte East Africa. Thank you for joining us this evening. You found us in the middle of the pay conversation, and I wonder whether you want to pick it up from there, or another question which has been asked by many Kenyans is around the administration that we have faced earlier this year, income and expenses validation. What are you seeing on the ground?
Very much. Thank you for welcoming me, and apologies I came in a bit late. I can't agree more with my co-panelist in terms of the pay as you earn, especially. There's always this conversation that there's an amount, say the 35 billion, but we don't have how that amount is arrived at.
Yeah.
Kwame lays a very important point in terms of saying, look, are we only looking at the amount of revenue we are going to lose, or we are also doing an analysis of the ripple effect of that, what that disposable income would do to the economy, even from other taxes perspective. So we really hope that this one will be included, as we go along, as Kwame put it. It begs the question as to why it is not there. And I think it's not the only proposal that is not in the bill. There was also the conversion of Mitumba. So here it was dropped and then it will be brought in Parliament. So there's that conversation in terms of why that is happening that way. But let me come to your question in terms of, income and expenses validation. So if you look back, I think they started under the Finance Act of 2023. That is when the government introduced the whole concept of e-teams. And within a period of 3 months, that is with effect from 1st of January of 2024, the expectation was that all the expenses that you claim under your income tax returns will be backed up by an e-teams compliant invoice. So fast forward, what happened? So we had a lot of challenges. To date, as we speak, I don't think even the government entities, including county governments, are giving you e-teams compliant invoices when you go and pay your licenses.
Yeah.
So as a result, there was a delay in terms of implementation, which is a good thing. For 2024, we didn't have it. But I think in 2025, then KRA said, look, we are going to implement this. And we have seen that with the effect of 1st of January of 2026. Julians, I have been in this space of tax for some time now, maybe not so many years like some of us. But filing the return this year has been very, very challenging.
It's an extreme sport.
It's an extreme sport if you put it that way. And it starts, look, what you do, you're supposed to log in into iTax. You're supposed then to download a file that has your e-teams invoices. So I remember one of the clients I was just downloading, I think the day, actually I added this week, that is yesterday. The number of entries in that particular return are more than 600,000. And remember how e-teams works is per invoice. It's more or less like, if you put it that way, it's more or less like cash accounting. You get an invoice, it posts, and then you get it there.
Yeah.
And how some of the, so there are so many variables. So how most of the entities will work, for example, is that by December, for example, they'll close their system and they will not probably book more invoices. So you have invoices that are in that particular file that read, for example, for the month of December, but they are not in the accounting system. You have also a file that is not able to differentiate between a current expenditure and capital expenditure. So in that file, you also have, your assets that you bought during the year and what have you. And remember, it is per supplier.
Yeah.
So it's a bit of a chaos in terms of how you go around that. Give it to KRA. I think they have really supported in terms of ensuring that you can also take up the non-e-teams compliant invoices and their accounting adjustments. But even that said, I think it is only easy for very, very small taxpayers, if I may put it that way. For the big taxpayers, it's a real challenge. But the good thing is also, I think the Revenue Authority is listening to us. What we are told is that every taxpayer will be facilitated to file the return. So we hope it will be the case. But it's actually a bit of a challenge, maybe the long term. And what other institutions like Deloitte and ISPAC, KEPSA had been pushing for was maybe let's not look at this thing from an income tax perspective for now.
Yeah.
Maybe we defer Section 16(1)(c), the one that requires to ensure that you have all your e-teams compliant invoices when you're filing the return. Until that day, we are ready.
Yeah.
I think it's Germany or France that is actually implementing e-teams now. They're actually starting with their e-invoicing. It is actually more VAT from a VAT perspective, and they're also starting with their large taxpayers.
Yeah.
So this idea of Kenya wanting to go after
Full
everything
throttle.
in one go, it's not working.
But maybe, Fred, the quick rebuttal there, and I don't hold brief for the Revenue Authority, but the question has been asked. Finance Act 23 provided that Section 23 would be effective January 1st of 2024. We are now effectively enforcing it January 1st, 2026. And the argument is you've had 24 months to really organize your affairs. What are you still complaining about?
Yeah, that's a good question, actually, but who is supposed to be organizing the affairs? Is it both the Revenue Authority and the taxpayer? As I just give an example in terms of some of the, and by the way, even besides the government entities, there are also a lot of challenges. I know the KRA has really worked a lot in terms of bringing solutions like reverse invoicing. Yeah. There's one that is called buy-in-sheeted invoicing. But changing a culture, Julians, is not easy.
Yeah.
Looking at Kenya, for example, you can imagine someone in the most remote part of this country. Mm-hmm. So it will take time for people to appreciate. And some of the entities, by there, they don't only operate in Nairobi. You have, for example, banks that have branches all over. Mm-hmm. So how do we then expect them to be able to implement this thing overnight? Someone was giving an example, actually, for like an institution trying to implement an ERP system. Do you know how long it would take for them to implement it successfully? Yeah. Not less than 24 months most of the times. And we are trying to implement a whole system for the country within a period of 3 months. Yeah, but give it to KRA. They have really facilitated, but we hope more can be done.
Maybe a quick tangent to that point, Gilna. Finance Bill 2026 now proposes to redesign our filing schedule. You had until June 30th. Treasury is telling us, actually by April 30th, you should have filed these things. And if you're filing nil returns, you have until Jan 31st. Gilna, your take on this?
For nil returns, doable, I think. But the one for the 4 months, it's not doable. If you're already facing a challenge with this e-TIMS issue, and we're going to be facing it, it's digital. Obviously, we're going to have system issues. Filing even here, like my own tax return, there were issues. We had to go and get them resolved. So things are not captured on iTax correctly. So there is a system issue. So if you want to go all digital, then the systems need to be very robust. They need to be tested and ready for the volume of information. Last year we had the whole issue of we couldn't file returns on the system should be ready for everybody to be able to file on 30th, if you tell me. Yeah. You can on 30th June, ideally, because that's the deadline that's available to everybody. So everybody can opt to file on the same day. The system should not also be crashing on that day. And we should not be given these 6 days, 7 days extension that I think we got last year. Because problem is the systems cannot cope. So either you change the systems before you start looking at changing, the laws, because your capacity is one. And the other issue is, if you're expecting a taxpayer to do all their obligations in that 1 month, which is your 4th month, which ends up being your first installment, your balance of tax, you're telling me to file my returns, finish my audit, statutory audit in time. You're only giving 4 months to all the taxpayers, which I would say 75% of our country runs on the December year ends. Yeah. So, and we might not even have that many number of auditors in the country to do that much, turnaround in time for you to file the return. So, I feasibly not possible, I think, and that's just my take on this. And I think I've also received a lot of feedback on this issue, even from auditors themselves, that this is not a viable option. It's just not practical to do it in 4 months.
But Gina, a quick rebuttal to that, and as Gina responds, Jackson, just get me that bite where CS John Buddy is speaking about the filing schedule. We'll play it after she responds. And look at it this way. If you're required to file your balance of tax by April 30th, why not equally file on April 30th? Because the whole idea is to align the revenue recognition with the actual payment. And secondly, we're in an environment where we now have a lot of auto-population of returns. So what's the deal here?
I think even if you have the final tax, there are times when even those final taxes are being done on an estimate basis. And hence we used to rely on those vouchers that you used to get. When you actually then submit the return, you'd end up, at least even if by June, you'd have finalized, cleared up a lot of areas And you'd then have a final position by the time you file the return. And you'd end up either being in a payable or a repayable position.
Yeah.
So sometimes you'll end up finding even a lot of the balance of taxes, as you say, are actually on an estimate basis. So it's not just that you are required to pay your final. That final could also be a so-called estimate at the best, because you can pay a smaller amount later at a small penalty, which is fine. But the fact that we are talking about, again, I may be re-emphasizing on this issue of the systems are not ready. In my view, yes, the government, the KRA is helping us, but can you imagine the volume of help that they'll need to give us? Because he's looking at, a few taxpayers, we are looking at a few taxpayers. So in total, we are looking at a huge volume of taxpayers which have multiple range of issues. And if you're not able to resolve them by, they could not even have a template ready by March that was promised. If you look at it, we were promised a template by March. We are now in May and we are still struggling to file. And we are still coming up with new issues as we keep on filing. So to me, unless we are 100% ready, do not delve into changing things which are, working okay for us. That's my take on it.
Kwame and Fred, I want your take on this, but before that, let's hear what CS Mbadi gave us the justification for this proposal.
On the time for filing returns. Yeah, I think that also came out. Remember, we are talking about filing returns for the previous calendar year. Like the income tax that you are filing returns on as an individual, which requires you to refile returns by 30th of June, is the December 2025, what you earned up to 2025 December. And these are individual income income earned during that period. So we are saying that once December, you come to the end of December, you have January, you have February, you have March and April. Why can't you file returns between January and April, so that we don't wait until towards the end of the year is when everybody files returns, and therefore KRA has no time really to check on the accuracy of your filed returns. An individual, with most of them with salaries, by December, you know how much you have earned. And then you have January, you have February, P9, your employer can give you. So why do you have to wait until June? Honestly, unless it is for some mischief. We are giving you 4 months, you file the returns. Then Kenya Revenue Authority.
Kwame, you have January, you have February, you have March. What's the deal?
Well, okay, so the first thing that we need to ask ourselves is, what is informing this? Because it looks like in his argument, the less, or rather, we should put the taxpayer under pressure to file quickly.
Yeah.
And he's saying that so that we do not have mischief. But I've always known tax law, and it says this in the tax procedures as well, that you are responsible for the accuracy of your return. So why he's saying that he's using this to ensure that we do not make any, mischievous entries, I'm not too sure. I'm not too sure why. So that's the first. The second point is, I think the cabinet secretary, he comes out as thinking that taxpayers are bad people, and we need to give them a rough time.
Something.
And we need to give them a rough time. And I'm just wondering, to be honest, I think for the amount of declarations that we give, I'm also wondering where maybe perhaps Parliament should ask, what mischief are you solving here? And what does it mean in terms of the tax laws? For instance, have they made an assessment that justifies this? Because the problem is, as you've said, they have a systems problem. And if they force people to do everything in an even shorter period of time, what's going to happen is it's going to generate even more. So I don't know that 6 months, I don't know that telescoping everything and stop talking about 4 months, making it 4 months and not 6 months of alliance is useful, except to show people that. And I think the tenure of conversation with taxpayers over the last few years has been, we'll use everything, and the law we are discussing in itself, to make your life so difficult that every day you're thinking about what will happen to me if, I violate this or the other thing. So to be honest, I'm not persuaded by what he says. We understand, but the idea that you need to give KRA time to find your mischief when you are required to bear your taxes, to keep your tax records for almost your lifetime.
Yeah.
And that is something that I don't think solves it. But if you lay that off with the weaknesses of systems and the fact that many more taxpayers are coming on, I don't think this is a reasonable thing. You're just going to generate more failures in the system, which is going to undermine everybody's belief and faith in the systems themselves. And I think building part of the systems that the KRA has is an essential part of how tax compliance will happen in the future. But the Cabinet Secretary seems to think we're all mischievous.
But Fred, to the point that the Cabinet Secretary is raising, if you look at the last 3 tax amendment cycles, that is the tax amendment for 24, Finance Act 25, and now the current one, there has been a push by government to manage its cash flows by getting them as soon as possible. That is why withholding tax is now remitted within 5 working days. If you look at Finance Bill 26, there's a proposal around the same coming in. We had the tragic experience of excise duty for alcoholic beverage manufacturers within 24 hours. This simply tells you, the argument is, as I said earlier, if you're remitting your balance of tax by April 30th, for the revenue recognition and payment alignment, we want that visibility so that we have a longer lean time now to follow you up on any reconciliation.
First of all, that issue on lean time in terms of following up on recognition and reconciliation and what have you, is neither here nor there. And the reason I say that is because the Revenue Authority has actually 5 years under the Tax Procedures Act to come and look after your records.
Yeah.
There are so many viewers who probably even Revenue Authority has never touched them. So you can't then argue that just waiting for 2 months, you are losing much. But having said that, I do think that shortening the period is not probably a very bad idea. You probably would encourage some sort of efficiency because you'd ask yourself, for example, a bank will sign their financial statements and file with CBK by 31st of March.
Yeah.
Maybe you could argue that within 1 month you should be able to to finalize your issues and file the return. But I think also when you discuss the policymakers today, we have a very simplistic approach of looking at things, and I'm sorry to say that. If you remember when the 5 working days conversation was being introduced on withholding tax, the argument was very simplistic. I remember someone actually giving us a demonstration of saying, you are paying Jurians 100,000, you should withhold 5. So you pay Jurians and then withhold this 5.
I know that someone.
The tax laws, Jurians in Kenya are so complicated. Sometimes you even don't know what is subject to what. So you have to engage a consultant, for example, for them to look at your payments and what have you. So there are so many nuances that go in. It is not as even for financial statements, and it is true that by that 1st of December of 2025, maybe you have already earned income and you should be knowing it.
Yeah.
But getting the number that is actually payable as tax, a lot goes into it.
Yeah.
Jill and I will tell you, you'll have series of meetings just discussing, because the tax laws in Kenya also are not as simple. And also 2 points. Do we have a system that can withstand this? Maybe not, especially given what we have seen in the past years. And the second point, on which I think is more important, why do we want to implement everything at once? We are already struggling to file the returns now with e-teams and income tax, income and expenses validation, and yet we want to shorten the time. Actually, we have submissions. I don't know whether that's the same with my co-panelists. We already have people who are requesting for if there can be an extension for this particular financial year because they don't see themselves being able to file some of these returns. So I think we take a step at a time. Let's not bombard taxpayers with so many changes at the same time. And when you look at the bigger picture, it's not that they are going to have any significant impact on the exchequer.
Yeah. But on the upside, even as we look at all these challenges we have with the finance bill, the tax amnesty is being revived, Gilna. And I'm sure that is one area where many of us will be excited about. I take a little bit of a different view, but let me hear from Gilna. How do you view that?
I think for me, I look at it as a positive, and that's a big plus for me when I looked at the finance bill. It's actually a very good thing because looking at the number of, I think, assessments that we have at hand that Revenue Authority is raising, some maybe not even factual, some, not in law, but we are where we are. But if you look at the number of cases that are currently even at courts, it's a brilliant opportunity for someone to resolve a lot of these issues. And if there's any place where there's an element of conceding to any payment, this is a wonderful opportunity for them to concede close the matter rather than going to various levels of court. And getting the waiver, because what does a taxpayer hate the most? Penalties and interest, because the cost of non-compliance is so expensive here in Kenya. And it's not that they're doing it because they don't want to pay. Sometimes it's even the lack of knowledge, because if you look at the way our tax laws have changed over the years, 1 year it's vettable, 1 year it's not, 6 months it's not vettable, you're moving it from, exempt, zero, you've claimed VAT, you've made genuine mistakes sometimes, and this happens. So it's a good way to give them a chance to look at your affairs, go back, look at for the last 5 years, because at least that's the open window, and clean up your affairs. And if there's any tax to pay, an opportunity to pay, and an opportunity on the flip side for the revenue authority to collect, because even in the last one, they managed to collect a significant, it was what, 50 billion?
50 billion, correct.
50 billion. So to me, I think I'm looking at it from the assessments perspective, because the number of cases that are in court currently, maybe they can unlock a far more bigger revenue sum, because the amount is huge, I know.
Gina, as you talk about the number of cases in court, there's a very huge proposal here around the Tax Procedures Act and agency notices. We'll be coming to that. But, Kwame, is there a contrary argument to this? And those of us who are skeptics of the amnesty this time around are asking, we had the voluntary tax disclosure program, we had the 60-40 arrangement, then we had the 23-24, 24-25 cycle of the amnesty, which raised 50 billion. In one administration, we have seen 4 amnesties. And the question being asked is, if I'm a taxpayer, why would I be compliant anyway if I know that at the end of the day, there'll be an amnesty? Is there a risk of a perverse outcome here?
There's a real risk. So first, let me start from Gillian's voice. I think what is generating... So when you have a complex tax system, which allows discretion for the tax authorities or administration to actually interpret and use tax policy either to punish you or for discriminatory purposes, you're going to clog the courts and you're going to clog the tribunal. So in my view, and I accept your view that part of this is basically just to unclog the courts, but it's telling me that the tribunal itself really needs to be rejigged. Yeah. Because very many of its own decisions actually is the subject of these appeals. So that's the first thing. And so yes, but I also fear that, look, if I sit here and every year I know that just because I'm late, I did not file whatever is required by the 9th, that in itself has attracted, say, some amount of money basically, which is really, really large. And you look at your bottom line and say, okay, I'll hold on. I'll try and keep this in court, or I'll wait until another amnesty position comes. So we have an amnesty almost every so often. While the amnesty itself is encouraging, but I think the perverse incentive tells us that it's not the fix. The fix is actually to make the tax compliance much, much easier, and not to make people afraid and actually have to wait for the next one. So really, it's a perverse incentive, yes. But at the same time, it's suggesting that there's a systemic problem. Yeah. And that's not what we are solving. And I think all these things came even more with what was praised as a Tax Procedures Act, which is supposed to clean up everything. And to be honest, it's made a mess of it.
Fred?
Yeah. Maybe just a quick question. I don't know. I know, Julians, you engage the policymakers just like most of us. I normally try to ask myself why we did away with the application for waiver of penalties and interest. And I think they
said it was being abused.
Year on year. Good point. But when something is abused, sometimes I think we also use a hammer to kill a mosquito. So if something is being abused, why don't you come with solutions in terms of how you can make it not to be prone to that abuse? I think there are so many recommendations, and one of the recommendations actually that we had done from a waiver of application of waiver of penalties and interest, is that, look, make this process as transparent as you can. Yeah. Make taxpayers understand that if I meet criteria 1, 2, 3, 4, I'll get waiver of 40%, I'll get waiver of 50%. The reason it was being abused, of course, is because that checklist was sitting with someone somewhere. So you are a person you made the same mistake with is getting 100%, you are getting 40. So that's the reason why. But world over, I think penalties are normally waived. I think what is not waived ordinarily is interest. Yeah. You can argue that for interest is more of time value of money. Maybe you didn't pay the revenue authority, but you invested that money elsewhere, which can be argued. But I think the bigger problem also is that you have a lot of debts in the system. As Gilna has actually put it, some of them are not based on very good tax principles. So those taxpayers then would feel sort of cheated. But I do agree with you that successful, coming up with amnesties year on year may also be some disincentive to the compliant taxpayers. You probably need to come up with a long-term solution. And in my view, we need to reinstate the waiver, application of waiver of penalties and interest, but then come up with controls that ensure that the process is not abused. Otherwise, we're going now to be looking at tax waivers or amnesties like the lad rates. I think I normally see lad rates every time is being waived. So you're almost waiting for it to be waived for you to make the payment. So I think we should then, but it's a good thing for now. Taxpayers will benefit from it, but we need to really think about it going into the future.
Friends, we have recurrently mentioned the courts here, and if you look at the Finance Bill 26, Tax Procedures Act, is a proposal to delete Section 4214E, which essentially says, if I'm slapped with an assessment from the Revenue Authority, as long as I have appealed, KRA cannot enforce an agency notice, meaning it cannot go and attach my accounts and begin its recovery process. Now, there's a proposal to delete it via the Finance Bill 26. This will be the 4th time, by my count, where we are engaging in this debate. Let me start with Gilna. What do you make of this proposal? And remember, and I'll play, maybe, let's listen to what CS John Buddy said about agency notices to get the context of where they're coming from so that we adequately respond. Jackson, do we have it? Jackson, are you there? The bite by CS Buddy on agency notices? Play it, please.
That has been very unfair. You see, where KRA has assessed you and found that you should pay X as amount of tax, then you go and challenge it, and you lose the case. The mere fact that you have appealed, just appealing without getting an order, you cannot pay that tax even for 10 years. I think that is wrong. You are supposed to get explicit order to appeal the tax. Then, now it cannot be collected. But if you have not been able to convince the lawyers, what I'm saying is, my friend, you go to court and the judges have not given you a stay order. Why do you benefit from stay order? What if every person in this country, everybody who is supposed to be paying tax, decides to challenge the tax assessment or what they are being asked to pay? Everybody. And then they lose case at the tribunal, all of them. And then now, by merely filing an appeal at the High Court, you are not supposed to pay tax. Would we run a country with such kind of thing? So there should be a very good ground for giving an order. And that is what we expect our judiciary to determine.
Gilna, you've had the CS. Your take.
I think first things first, we just need to even look at the assessment to begin with. Is the assessment even correct? I mean, I am in that space, and if you look at the type of assessments that are raised, majority of them are neither correct nor in fact nor in law.
Yeah.
So obviously, and if you, I'll give you a classic example. There was a taxpayer that was assessed in billions. Even the bottom line is not in billions. How can you assess somebody in billions? Yeah. Just an example of how arithmetically even the assessment can be wrong.
Yeah.
So if you cannot tell somebody that do not go and appeal when they're being assessed over in billions, because there's no way that person can rack up a bill of a couple of billions. So that to me is firstly unfair. A taxpayer should have the right to object. If that decision is obviously not favorable, then the right to appeal at tribunal should be there. Even at tribunal, you've seen differing judgments.
Yes.
Like in classic examples, we have seen two types of judgments being issued, one being correct, one being incorrect. I mean, in such a short span of
on
time.
bad debt for...
Yes. So in such a short span of time. So you get where the frustrations come from, that it's not always that somebody else, even at the tribunal, got it right, for example. So you cannot stop me from appealing further to High Court and then penalizing me, because if my assessment is in billions, you expect me to have an order of 50% of the same amount. Who has that much kind of cash in this day and age? So that to me is rather unfair, and it's not at all good use of people's time, in my view, or money. So that's not the right way, because it's really, really deterring if you have such orders to be granted. Yes, at High Court we anyways have that, should we want to proceed. But at least at tribunal you would have resolved some of the issues. But if at tribunal is when you're telling me to start getting these orders or agency notice, am I dealing with an agency? Am I doing my business, or are you coming and just taking over my bank account and not letting me do my business even? You've already given me a mini heart attack by giving me this massive assessment. Now, on top of that, you also want to stop my business. You know, an agency notice also has detrimental effects on the business, because whoever receives it, the bankers start thinking, oh, there seems to be an issue with this guy. So even getting further credit financing for them is an issue. So the repercussions of having these agency notices are far vast, and to get them removed is like climbing Mount Kenya, in my view, because to get them out, it takes a few days, going from department A, B, even the bureaucracy to get them removed is far too challenging for a taxpayer. So if you're looking at SMEs, that sector cannot survive with such laws in place. And that's the sector we are trying to grow as a country. That's our backbone.
Before I bring in Kwame and Fred on this point, let's have a quick break. We shall be back with a lot more on this subject. On Business Redefined, we are unpacking the budget estimates 26-27 as well as Finance Bill 2026. Before we took a break, we were discussing the proposal in the Finance Bill of 26 to delete Section 4214E of the Tax Procedures Act in terms of agency notices, and the fact that currently you can be protected by law if you appeal until that matter is sailed through court, an agency notice will not be enforced. We heard from Gilna, Kwame, and you heard what the CS said.
Yes. So one of the things that... so actually, I thought this was the third time they brought it back, but you reminded me it's a fourth time. And confirmed, yes. So, so look at it. There's a desperate attempt by, should I say the Treasury, to bring in this. And one of the things that I have a problem with is, one, Kenyans have a right to litigate any matter in the country. And that jurisdiction is given to courts, and courts make that decision. So I am wondering why the Treasury and the Cabinet Secretary is speaking for this side by saying that, look, we want to restrict your ability to appeal cases and to defer any payments outside what the judiciary may make. And I'm not too sure that that's right. Because let's remember that tax laws are themselves laws. And all laws are therefore subject to interpretation by the judiciary. That's what you're saying. When you pass a law, you're saying, fine, someone else will interpret what it means and actually enforce it. So this idea that you're going to pull the rug and truncate people's constitutional rights because you need to achieve a revenue target, and then to catastrophize it by saying that all Kenyans, come on, Cabinet Secretary, you can be kinder to us. 3 million taxpayers pay every month 30% of their income without going to court. So to try to use scare tactics by saying that everybody will therefore go to court. I mean, you wouldn't collect $8 billion shillings every day if everybody was as interested in using the courts to block you. So I think this is, in my view, really, really bad faith law. It is. And courts have also talked about the fact that, look, people's constitutional rights cannot be truncated just because we need the convenience of collecting revenue today. No, I mean, it's bad faith, to be honest, and that it's come for the fourth time means that courts are being allowed, are being used to, do a whack-a-mole. As soon as it comes out, they're going to bring it back again and again. And that's bad design of tax policy. But I think the justification that's been given for it is just bad, and let's hope Parliament doesn't accept it.
The Treasury CS argues that we fill the courts with frivolous petitions.
Yes. Look, in the same way that courts would defer to the Treasury Secretary on fiscal policy, I think the Treasury Secretary should also be humble and allow the courts to determine whether Kwame's case is frivolous or not. That's not for him to tell a judge of Kenya, who's sworn by the Constitution. So he has discretion to use his own vocabulary about whether a case is frivolous or not, but that's a finding that should be left to a court to do. And that same Constitution allows us to litigate it all the way to the Supreme Court.
Yeah.
Have some patience, Mr. Mbadi.
Fred Kimotho, part of the argument has been, if you look at our peers across this continent, last year Uganda adopted a 30% deposit for you to go and appeal. Isn't that trajectory telling us something?
I mean, I've had that argument with quite a number of people, especially the proponents of this particular law. But look, I think before you compare jurisdictions, and that's what we do every day in tax law, you don't only look at one piece of legislation. I think Kenya has a very, very vibrant constitution.
Yeah.
And actually, if you look at Article 48 of the Constitution, I think it's very clear on this particular matter. And by the way, now that it's being pushed for the fourth time, I have a feeling that it may pass Parliament. But if it does pass in Parliament, I think this is one of those laws that can easily be challenged in the court. And by the way, you mentioned the case of the bad debts, and you looked at me. I know the reason why you did that. But let's give an example of that particular case.
Yeah.
So you had 3 taxpayers went to tribunal on the same matter, same issue, same concept. 2 of them, the tribunal ruled in their favor. So it means that they didn't need to go to High Court to appeal, but the Revenue Authority did. But one of those taxpayers with the same issues, the case was ruled against them.
Yeah.
By deleting section 4214E, what it means is that the taxpayer who lost that particular case, which is actually the same for the other people, if the tax in question was $1 billion, you're actually telling the Revenue Authority to correct that $1 billion. What does it mean?
Yeah.
Is that level playing ground at all?
No.
So the idea then is, and I think the purpose of that particular section is to ensure that you don't have blanket application of law that may be detrimental to some of the taxpayers. And by the way, even as we speak now, when you appeal a case at the High Court level, the courts have discretion to ask for security. And the reason that is a better option than what we are doing now is because by the time the court is saying give 100 million or this amount of security, they also do consider the merits of the case and they listen to both sides of the coin. And you can be able to justify why you need to pay 40% and not 100%.
Yeah.
By deleting this one, it means that if you have an assessment like the one Gilda mentioned, you have an assessment of 70 billion, your top line is not even 70 billion, you're supposed to go and look for that
It's
money.
not even 100 million.
It's not even 100 million. So you're supposed then to go and look for that money and bring it. So it's bad law. I do agree with my co-panelist, and I think we really need to push for it to be, not to be adopted. And unless, at least the good news is that we have the same chairman for the committee, and I had his comments last year, unless something changes. So I hope that this one is one of those that will not see the light of the day.
All right. Friends, I'm told we have about 15 minutes to go. One matter which we must discuss, Mitumba, to tax or not. We saw it in the earlier circulating document. The green copy does not have it, but the Treasury CS has told us, for all intents and purposes, Treasury will move it back to Parliament as an amendment that should be included, 5% of customs value. Gilna.
I think going back to the same notion of level playing field, and if that's the informal sector that we keep hearing of that don't pay their fair share of taxes, then yes, taxing them might be a good move, because everybody needs to pay their share of taxes. The way the tax has been devised on the customs value, whilst that to me is not making a lot of sense, and I'm not sure how they came about with that sort of notion of why they need to collect it at the point of importation and not at the point of sale, because they are making huge amount of money.
But tracking them at sale point is difficult.
It's difficult, but now that's the job of now the Revenue Authority, because why am I being taxed on my profits or my salary, for example, and I'm not being allowed, and somebody else gets to enjoy it on the cost only?
Yeah.
So I'm not sure why the different level of taxations are coming in, because you're treating them like as if they are a non-resident and just taxing them on the small percentage of, maybe 1.5% of their income or something like that. But that's not their income in totality. So to me, if you want to tax them like a resident, and in a proper, either a corporate way or however way you treat a taxpayer, but not just at the point of entry.
But maybe the question is, and Kwame, to your point, is this a final tax?
Okay, so I mean, I spoke to a few people who know a little bit more about the Mitumba trade than I do, and they're saying that one of the things that they've had over time is a motley of, you know, all manner of taxes. They pay a amount of money as excise to come in and all that. So this is supposed to be like a final tax.
Yeah.
Now, and I said, okay, be careful, because if it's 5%, they appear to think that they would accept it. But be careful, because we know what happens. I mean, and the nature, the gyrations around tax rates in Kenya. So why are you sure that next year it will not go to 10 or it will not go to whatever? So that's the problem. And then the second question is just what Gilna said. Look, you have to, if you are calling this an income tax, then all incomes should be treated equally.
It is now a customs.
So now it's a customs, it's on the basis of a customs, whatever. So if you want to call it some kind of lump sum thing and all that, please do. But I think to call it an income tax and a final tax for income is a bit of a misnomer, to be honest. I mean, it doesn't sit well with the principles. And that tells you once again that we need to work or develop a tax system that works for everybody. Because when you have carve-outs for specific sectors on account of the fact that, well, the sector is special, every sector thinks of itself as special. So I think that's the idea. But the idea was that this is an industry where importation is in bulk, and then there's enormous distribution. The association claims that there are 2 million people who actually earn a living directly, indirectly, or in part-time from this. So I understand the problem that's being solved, but I think it will probably come back to another 2 years there and saying, okay, maybe the revenue isn't enough, or the tax system wasn't designed for
15.
So let's make it 15, or you change it to something else. So that's the problem here.
Fred, very quickly.
I mean, it is said that the Mitumba traders are the ones who propose this tax. I don't know how. Maybe they thought through it, but I do agree with my co-panelists. I think the structure of the whole thing is not very well structured. If you remember the minimum tax conversation, there was the idea that we are taxing capital. I see us landing to the similar problem here, because you're charging someone 5% and you're putting it on the income tax, and it's on the customs value. Remember, you're supposed to tax on profit generally. That's the tenets of income tax. And their profit, by the way, they may be pushing a lot of volumes in terms of money and what have you.
But the margins
the profitability may not be as much. So we hope that it is one of those that is well thought out. I don't know whether of course, there are a few versions of finance bill. I don't know whether the green copy has the VAT exemption status for them.
Yeah.
But that also, I see a bit of a challenge there, especially if it is going to go through, because then you almost then are not putting them on same level playing ground with the local manufacturers of clothes, because then you are exempting second hand. But then what happens with the people who are actually doing manufacturing locally? So there could be then a need to just relook at it a bit so that it doesn't also face some constitutional issues as we go along. But are we a proponent of introducing taxes in that particular sector? I think we should. We're the same people who keep talking about widening of the tax base. So everyone who can pay the extra coin, let's go for it.
Friends, we have a lot to cover, and of course time is fast spent. I want to give you all a couple of minutes to just give us your call to action as far as Finance Bill is concerned. We've been given until the 25th of May to submit our comments. Gilna, what are the areas which you think are really priority for consideration as we make our submissions?
I think it's the one for the agency notice issue. Firstly, because that will be too detrimental to all taxpayers, because the ones you're in the net, they're coming for you.
Yeah.
So that's the one key problem that we need to resolve. The issue of PYE, if they can bring that back in as promised, that little cushion that we seek as Kenyans will go a long way. In terms of other areas, I think the whole change, if a whole relook can be done to this whole finance bill, because it's like whatever did not go through in the previous finance bills is now being brought in. There was a reason that they did not go through in the first place, and we really need to push back on all these areas. It might look like a very simple bill, or maybe, I don't know, easy bill, but it's not. If you look at the fine print, there are too many issues that can affect all of us here in the long term, because it's more a revenue generation bill, which is fine, but to the detriment of who?
Yeah.
Businesses, and that's what we need to really push back on. And I think comments need to be, public participation will be key at this point. And like we did last time, they listened to us in various areas. So I think that's very critical at this point in time.
Kwame.
Okay, so yes, in addition to what Gina said, of course, I'm also concerned about giving administrative authorities powers that allow them to evade court scrutiny of their actions. That's dangerous. In addition to, I think that it's not constitutionally valid. So that's the first. And the second one is just related to the Mitumba question, but also the question on revenues. You see, on pay-as-you-earn, the idea that those things will be sneaked in on the floor worries me, because then it means that taxation policy is one area in which Kenyans have been very animated in the last few years. So anything that tries to to sneak it in without a broad conversation about what the implications are, worry me. And the third one, in my view, is that it's time for the parliament as a whole to consider, look, I try to read, and if you think about each amendment on its own and what it does to the tax code, I mean, we don't have a tax code because every year it changes.
Yes.
So that's one thing. And the final one, I think, is Parliament needs to take a view and ask ourselves, okay, what is the medium-term strategy worth if you can run a full cycle of it and it's not informed how we've designed fiscal policy and tax policy? So that's the idea. But I also think that, of course, a few things here and there, VAT is even getting more complicated every year. So complicated tax bill as an end in itself. I would think, and I think I must be circumspect, but as I say this, it's clear to me that government didn't learn enough in 2024. In fact, what they're trying to do now is to make sure that they sneak back every year all the stuff that animated Kenyans. And I don't think that's fair. Yeah.
Fred.
Thanks, Julian. So I can't agree more with my co-panelists in terms of pay-as-you-earn. I think the employee, for the last 3 years or so, employees have really suffered. We hope that one will be looked into. But more to that, I actually thought maybe it may not come through the finance bill, but these levies, SH4.8, affordable housing, like for me, I thought affordable housing would have a sunset date. Yeah. Now that we have already created the so-called revolving fund of some sort to give security to the developers of this particular property. So the expectation is that we will see a bit of relief, even if not this year, especially for those other levies. We probably would want to see a bit of relief to the, to the employees. But having said that, we have also seen there are so many changes in this particular bill, Julians, that they appear to have been very short-lived, even those that went through last year.
Yeah.
I was very disappointed to see a change on Section 9.1. The change that was done last year was on, moving the freight tax from being a self-assessment regime to withholding tax.
Yes.
So we prepared a memoranda of this size, and we went to Parliament and told them what you're doing is wrong.
Now it's back.
Because remember, they had 48 people doing the self-declaration, and it was working perfectly. The moment you make it withholding tax regime, then you are saying 1,001 people should comply. They have seen the dip in revenue. So what does that say? So even in terms of reasoning to us as people who go in front of them to public participate, I think there is merit in terms of reasoning and seeing whether there is merit in some of the points that we raise. Because
and you need to factor in the 5 working days within that withholding tax regime.
Exactly the point. So you don't want them to make it so unstable that people cannot even be able to plan effectively.
Yeah.
Because people have just moved from self-assessment regime and they moved on, they sent communications to the importers or whoever it is, and now you're taking them back. But the last point, and by the way, there are so many points that we have to submit on here, but in the interest of time. So the last point is there has been something that you might have seen that is going to affect the financial sector in a heavy way. Interchange fees and the payments that are made to the card companies. So this is a direct response to the Supreme Court ruling that was done the other day. You must be aware of it for ABSA. I think we need to rethink those particular proposals. We do agree with the comments from the Cabinet Secretary that maybe everyone needs to pay their fair share of income, especially for the non-residents. But I think for withholding tax, as we all know, sometimes non-residents tend to shift the burden to the local person. Yeah. And that's a commercial conversation, yes. But in more instances than not, especially where you don't have a very big option of the non-resident people you can engage. Like for the card companies, we're not talking about more than 5 companies in the world. So it could then be a bit of a challenge in terms of, them being able to plug in. Maybe we need to think about how we can still bring them into net without affecting the financial sector, and most importantly, because it will still trickle down to the customer. There's also introduction of VAT, which if we read it properly, it may affect even some of the services that we use
the digital payments,
on a normal day. Yeah. So there's quite a bit of things that need to be looked at there. And of course, even things that are not in this particular bill that they may need to be looked at. But we'll be engaging the National Assembly on the same.
Jackson, quick question. Do we have that bite on CS Mbadi on digital payments? Yes, card payments. Just play it. We hear what the CS said to counter what Fred is saying.
Just ask you a very simple question. Today you offer professional service to the bank and you are paid. Are you not paying income tax? You are. Then someone who comes up with a card which is going to be used by banks also makes money out of that card. And by the way, they don't make cheap money. They make good money. Someone who crafts a card that you use in the machines or whatever, they make a lot of money. Why shouldn't they not pay tax? I don't think we are hurting anybody if you are innovative enough and you create such income. And by the way, those who design the cards, are they really small business people? Are they really small business people? Those who create the cards which these financial institutions use.
Fred, your quick rebuttal to what he has said.
I hope you had a chance to rebuttal with him.
I wasn't even physically present, but go for it before you close.
So again, it's the same thing that I was talking about. There is no issue. The idea is perfect in terms of ensuring that everyone pays their fair share of tax. I think how we are bringing it in form of withholding tax regime is what we are saying. There's a likelihood that will end up taxing the local mwananchi as opposed to taxing the card companies we are looking at. And there are so many other regimes that we could get these guys into the net. Talk of significant economic presence tax, for example, that we already have 3% on your gross revenues that you're making in the country. So I don't want to give them ideas because but they could be
because they haven't paid for it.
Exactly.
Friends, unfortunately, we have to bring this conversation to a close at that point. Remember, we have an invitation for comments on Finance Bill until the 25th of May, 2026. I can't emphasize enough why it's important for all of us to make our submissions on this particular bill. And also remember, concurrently, we are having public participation taking place on budget estimates across various counties, and ensure wherever it's happening in your sphere, please be part of that conversation, because finally appropriation is what drives this push for revenue that we are seeing. We're just beginning our coverage of this last leg of the budget cycle, so you'll be hearing a lot more from us in terms of the coverage of the revenue, fiscal deficit and expenditure estimates. So keep it business redefined. Many thanks to our panelists for their insights tonight. We shall do this again next time. Stay tuned.